Hello everyone, you're welcome to today's video, and you're welcome back to the classes. And as for those joining us for the very first time, you're welcome to my channel, you're welcome to my video as well. We're glad to have you in our mix. Alright, but I'm also afraid to say that you've missed a lot. You've missed so much, so many things you've missed. Okay, so the best thing you can do for yourself right now is by hitting the subscribe button. After that, and after watching this video, you go back to my channel, get all the videos we've made so far on this strategy, divergence. Now, the only way you can get a better understanding of what we are talking today is by watching our previous videos. Our previous video, we discussed on the general way to trade divergence, like how to trade the type of divergence, the way we trade it here. Okay, we first talked on how to spot fake breakouts on chart pattern, and we first focused on the flag patterns. After that, we went on how to spot fake breakouts on on channels. Okay, and now today we are talking on how to effectively trade channels. I understand most of you as first timers, you may not have heard of divergence, or even though you've heard of it, you don't use it to trade. I understand that, and even though you don't want to still use it to trade after now, fine, but listening to this video or getting something out of this video will help you a lot. Okay, it will help you a lot. So we advise to stick to this video even to the end, so that you're going to get so much information out of this that can help you in your trading, in your strategy. I understand the fact that it's a bad thing to go just get a new strategy from internet and start using, but also there's nothing bad if you just modernize a strategy by adding more information through it. Just do yourself this good, subscribe to this channel, and also watch the previous videos. Alright, so this way you can get a better understanding of what you're going to listen to or hear today. Once again, stick to this video, because at the end of this video you're gonna get so much information definitely you may not have heard about or come across. So let's get down to business, guys. Today we're going to talk on the effective way to trade. Alright, I always tell you guys not to be among the crowd. Alright, not to be among the crowd. All those sentimental traders, I'm afraid I wonder how you make money, because to all I care, in the financial market, the majority don't always carry the vote. Once 90% traders are going long and just 10% are going short, my brother, my dear, those of you going long will definitely go wrong. You lose your money in the market, and that's why every day by day they keep recording 97% traders as losers in the forex market. Why is it like that? Because almost everybody wants to follow what they watch on the internet, wants to trade the way every other people trade, forgetting the fact that the financial market is not a political background, where the vote always goes to the majority. So the financial market, the majority are always the losers, always stand out of the crowd. So today I will teach you how to trade effectively channels, the different way every other person trade. You believe with me that 90% traders who trade channels, something like this, they don't always use oscillators. They don't always use oscillators. And also I know by now you'll be asking me, hey Richard, Sammy, why is your trend line not passing through here? Why is it passing through the candles? Why is it passing through the candle? Why is it not something like this? Why is it not something like this? Why? I will explain to you right now. My trend line is passing through these candles because I already understand the fact that here is fake. Now the market is currently here, for example. Alright, the market is currently here, and it has broken this trend line. I already understand with my own style of trading that this breakout you're seeing is a fake one. Okay, so that at the end of the day, if what I'm thinking is true, that's a fake one, and the market goes back up and is coming down, see what I will now do? The trend line will no longer come to this place, because one, there are two things involved that have hidden so much money here. This place was seen, So many traders with so much money is in this zone. So the next time they are coming to bounce, they won't come to this place. The market makers, the people moving the market, will not do what? Will not come here, because they coming here, we see them releasing these people, this money below here. Coming to this zone, we see them releasing these people here, so they will not likely come here. Okay, so that's why my trend line is passing through here, because I already know that this place was fake, and I explained to you how I knew that this place, this move, was a fake move. Now see what I told you about this side faking here. See what I told you about the faking here. They went up, went down. Now this time around they could not get here because they are reading so many people here, and they're not bouncing here up. They came down again, they still bounced here. So if I had drawn my trend line like this, waiting for price to come here, I would have been missing out. But because I already know that this zone is a fake one, that's why my trend line is passing through what? The body of what? The candles. I'm not focused on this because I will explain to you why this place is fake. Alright, so let's get down to what? To business. You must watch my video on how to trade divergence. Divergence is really a good strategy, guys. It will help you a lot. But first, before you can trade the effective way I'm going to teach you right now, you must do what? Insert an oscillator into your chart. Why is it that at some point in time in the market, the oscillator does something differently from what the chart is doing? That is where the divergence comes in. That's where the divergence comes in, when the price does something different from what the oscillator is doing. And it is really a good strategy to trade with, guys, because see something like this. Price giving us higher highs, oscillator giving us lower highs. Alright, after taking this trade, see what you had. Stop loss here, take profit 1 here, and it was smashed all the way down here. So you see what divergence can do for you. Okay, not just that, guys. See another one. Price came here, lower lows, oscillator, what happened? Higher lows. And see the massive move we had. Alright, have you seen the massive move that occurred there? So that is what divergence can do for you. See this one again, higher highs, lower highs. Have you seen what you got? So guys, divergence is really a good strategy. Okay, if I were you, I would consider giving it a try, trading with it. Alright, but fine, we are not here to focus on how to trade divergence because I've already talked about this in my first video. The only thing you should do now is go back there and watch it, because I can't talk on it right now. So let's get down to this topic. Now this is your channels, very perfect one in that matter. The first thing you have to do is to insert your oscillator, so that at the point where you witness the market doing what? Giving you lows. Let's as this is where the current market price is. This is where the current market price is, guys. So market has given you a low, and it's giving you what? Another high here, bouncing here, right? Giving you another what? Another low. But first, let's assume we are here now presently. The market has established what? What you now do is go down to your oscillator, compare them. Are they doing the same thing? The chart is giving me what? Here, a high here. This one is giving what? Another high here, lower highs. But what is oscillator giving me? Compare it like for like. This is the first high, and this is the second high. So oscillator was giving me what? Something else, a high here with another high that is higher than the previous. Are you seeing this? So at that point you have understood that hey, this market is what? Being manipulated. So the fact that it's being manipulated, what do you now do seeing this price like this? Because one, the market have not really done much. If you had given you another low, fine, but the market have not really done much. It's still giving you what? 1 low and 2 highs. So at that point, this is where divergence will not help you. This is where divergence will not give you what? Help in hand. You see that the market is giving you what? Higher highs, lower highs. So at that point, you wait for the perfect time to take this as a sell. You wait for the oscillator at the current price to break what? Your previous what? Level.
as someone who's trading divergence, you are not supposed to follow the chart. I kept repeating this on all my videos. Don't always follow the chart because they will manipulate you out. Follow the direction of the oscillator. Alright, now we've gotten this in the market. We've gotten this in the market. What do you now do? You wait for the perfect price where this oscillator will break what? This previous level. So the moment the oscillator came down and broke that previous level, now let's check out the candle. You see that is this candle. Okay, this candle here. So this was the point the market broke what? That line. At that point you would have taken what? This trade at this point. All the way to what? Your recent what? Your previous what? Swing low, your previous support. Alright. Now the second thing is getting here now. What happened? Market did not get, let's say you had your target where you got there. Because you setting your target here, you will not set it at the peak of this swing low. You set it in between or anywhere, you understand me? But fine, even though you got it here and you've seen that the price is struggling here, you would have gone out of a trade. Two things happen here. The price struggled at this level, okay, and oscillator is doing what? Recording what? Something else. So now you've traded all the way down here and you did what? You got this trade right. This was a winning trade for you. This particular one was a winning trade for you. And now on approaching this level, price did what? Also establish another what? Higher lows. Establish another higher lows. But oscillator did what? Establish what? Lower lows. First, price established what? Lower lows, and oscillator established what? Higher lows. And you took it after the oscillator did what? Broke the previous level as a sell, and it sold for you. Now selling for you don't mean you should be there. You should remain in the market forever. Nowhere to set your target, take your profit. Now two things happen here. Price came here and struggled. One. Secondly, oscillator came here and gave us what? Lower lows. While price was giving us what? Higher lows. Now the same divergence that occurred here happened here. So at that point, what do you do again? Wait for oscillator to come back and do what? Break previous what? Low, which is this level. Now let's trace a candle that broke so that we know where our entry was. So this, my friend, was a breakout candle. Okay. This was a candle that made our oscillator to break this level, that took our oscillator out of this level, this particular candle. So at that point, guys, this was what? Our trade. We took it here as a buy. Now all the way to our previous what? Resistance level. Not here. All the way to our previous what? Resistance level. Have you seen that, guys? Have you seen? So this one again was what? Another winning trade for us, because we've taken the trade all the way what? Up here. All the way up. And this was what? Our second winning trade. Now on approaching this level again, already you've known that, man, I'm in an uptrend. You should tell yourself that I'm already what? In an uptrend. And also in where? Channels, because you've gotten 1, 2, 1, 2. So your line should just go like that. Your trend line should just pass through this 2 and also pass through this 2, and expect price to react when it gets to that level. Now see what happened again. On approaching this level, price also did what? Formed another divergence. Price also formed what? Another divergence. See what occurred here. Price gave us what? Higher highs. Oscillator gave us what? Lower highs. Now this time around, where exactly is our entry? Where exactly is what? Our entry? Now you wait for what? Price to come back and do what? Break previous high on the what? Chart. This time around, not oscillator. If you're still finding this thing confusing, guys, go back to my first video, watch how to trade divergence. Okay, you understand how and why we are why I'm telling you to always wait for price to break previous level. So now you wait for this price to come down and do what? Break this previous level. This is the previous level. So when I extend it to the future, any year the price comes down and break, we'll not take what? It as a sell. Alright, not take it as what? A sell. So see what happened here. This candle came and closed on top of this candle. The next candle came again. The next bearish pin back came again and closed on top of that same level. not breaking it. So we were not in that trade. The market went up, threatened to go up, and still did what came down, and at this time broke this level. So we took our trade at that level all the way down here. Do you understand? We waited for price to break this level. Now price came all the way down, trying to break this level, but it did not break. This candle now closed above here. The next candle that came up still closed above there. The next candle that came up were what? Bullish candles going up. Now the next candle that came up was bearish candle, and this time it closed were below the level. At that point, that was where our entry. And because we are not guessing in market, our stop loss is supposed to be where? Some pips above our entry, somewhere here. Alright, somewhere here, because you are not here to gamble, or somewhere where the previous level, just here, somewhere here. You can just leave your stop loss here, and your target should have been where? On this trend line. Your target should have been where? On this trend line, guys. Okay, now you've sold that trade again, and again you made money from this trade all the way down here. Another correct trade for you. Now price reaching this level also give us what we call divergence. Let's compare likes for likes. Swing low. Give us what we call divergence. Yep, because this was it. It happened here. Price threatened to go up here, but it still came down. Now, but what happened on the oscillator? Oscillator did was rising, even while that price was going down. Oscillator was rising. So price gave us another divergence here. So at that point, where was our entry, guys? At the previous low. Price should come back and do close above the previous low. Alright. So at this point, where was our breakout candle? Where was our breakout candle, guys? This level. So we took our trade from here. Okay, now this time around we experienced something in the market. Price went all the way down and hit us. Alright, we were stopped on this particular trade. So this, my friend, was not a good trade for us. This particular one, we lost it. We were stopped here on this particular trade. So we lost this particular trade because we were we were stopped. Alright, but now the price still went up and did establish an uptrend. It went up, threatening to go down. Did as if it wanted to go down. Alright, but this time around did broke this level. So have you seen why I didn't bother my line touching here, my trend line, my resistance trend line touching here? Because it was a fake one. So I'm not concentrating there. And why is it fake? Because as price was rising, alright, as the price was rising, oscillator was falling. So we now had another divergence on top of this level. Now let's be honest to ourselves. We first had a divergence here. Let's assume we had the current market prices here. So we first had a divergence here. Like price came there and gave us a low here, and did went up to complete a move to touch where the trend line, the resistance level. Now after touching the resistance level, where was our, because market gave us higher lows, higher highs, oscillator giving us lower highs. Now we are expecting price to do come back and break and close below this previous level, which is here on the chart. Now let's watch it. Let's see if the price broke. Now you can see that the price did not break, rather the market did clustered on top of that level without breaking. Market clustered on top of this level and did pushed back up. So you see why we did not lose this trade, because we were still waiting for price to do break and close below this level. But what happened? Price did not break. Price did not close. The price just clustered below that level, on top of that level, and from there did went up. So that's why this is the area most people miss it. They end entering the market too early, while some end up entering the market too late. If you enter the market because you've seen price reacting to this level, reacting on this level, if you are taking it, definitely you will have lost it. Okay, but if you waited for price, if you knew this strategy and you waited for price to do what, close below this level, you were exempted from the disaster that occurred here. Now it gave us, price went up and did what? It gave us another divergence. Price went up and gave us what? Another divergence. After going down a little, it did what? It went up. So this time around, we are no longer focusing here, but we are the recent highs. So we are now waiting for price to do what? Come down and close below where this high, this previous high. We are now waiting for price to do what? Come down and close below this previous high, so that we take it as what? Sell. Because see what I call here, market gave us higher highs, oscillator was what? Falling, telling us the market was sell. And the only time we can take the market as a sell is when the market comes on and breaks what? This previous high. When the market comes on and breaks this previous high. Now see this candle now, this bearish candle. See what happened? It closed where below this high. This bearish candle now closed where below what? This previous high. So at that point, guys, that was our trade. From this point all the way down here to this level. And where was our stop loss? Just above that word swing high. So you see that, guys, because you waited for the right sign, in just how many hours? 1 2 3 4 5 candles from the 4 hours time frame, you had so much money, you made so much pips out of that market. All right, you made so much pips out of that market, 96 pips, guys. So all we do for the right time to enter. That's why I said price is bouncing on level is not enough reason for you to do or risk your market. Because one, for this price, see where the price bounced, but what happened? You were taken out. So it's not enough reason for you to take your trade as a buy or as a sell. You also have to confirm it, apply divergence to it. Okay, you should also apply what divergence is. So out of how many trade, guys? 1 2 3 4 5. You won 4 trades inside this channel and lost just 1. Is that not a good strategy, guys? Inside one channel of 5 swing highs and swing lows, you won what? 4 trades and you lost just 1. And from all the winnings you made good amount of ratios, risk to reward ratio. Not just winning 4 trades and losing 1, you make good amount of what? Risk to reward ratio. So let me quickly give you another example, guys. Another example from here, guys. So we saw price doing what? See what divergence can do for you. It also helped you to do what? To start this particular channel. The divergence was what took you into this particular channel, but everyone else was joining. So one of the importance of divergence is that you begin what every other person see, what every other trader do or join. They always tell you to wait for a trend to you trade along the trend. But when it comes to divergence, you can actually do what? Begin the trend. Like what happened here, you began this trend. Whoever was joining this trend was just joining what you started. Okay, and it doesn't end there. You also made so much money. Added to the fact that you did what? You started a trend. You also made so much money because inside this channel you had so many divergences. Now you made this one. You got this trade, right? Now where was our entry at this point, guys? The moment price closed above this level. But now we didn't take this trade because the closing candle was so much. So we wouldn't want to take this trade up here. Where is our stop loss going to be, guys? Just below here. So this trade is something that is something that you should not be considered. Okay, but see what happened, guys. See what happened after market closed here with this powerful candle. It came out and did a retest on this previous level. Market came back and did a retest on this previous level. So each time you witness something like this, the market breaking this particular level you're waiting for with such a candle, wait for a retest. So in this point you saw a retest on this place. After this retest occurred, see what happened? We now took our trade from here because the market rejected this level with a pin bar. So we took our trade all the way from here this time around with what? A smaller stop loss. A smaller what? Stop loss. They broke here, we could not take, so we waited for a retest. The market came down and retested this level and rejected it. So after that rejection occurred, we now took it as what? A buy. Okay, so we won that trade, and while the market was up, we witnessed something else. We witnessed another thing. Market went up. Comparing likes for likes, there was no divergence, isn't that? The oscillator was doing something, the same thing. So there was no divergence. Now the market came down and broke this level itself, faking so many people to sell this trade. Came down and gave us another low. Alright, but this time around, oscillator was doing what? Recording something else. White chart was giving us higher lows. Okay, oscillator was giving us what? Lower lows. So at that point, what do, guys? You wait for oscillator to rise up and close above this previous level. Oscillator to rise up and close above what? This previous level, guys. This previous level. So after that closure, guys, we now took this trade what? As a buy. Now we don't only have divergence as confirmation, we also have trend line as confirmation. We don't also have the trend, the support line level as a confirmation. We also had a divergence as what? A confirmation. Now, what would you have done if it didn't combine divergence in this place? What would you have done if you've seen, you are someone that trade channels and you've seen such a move to the downside, breaking this place? What would you have done? You would have taken this trade as a sell. You wouldn't have expected a buy on this trade. Before this particular rejection, would have taken this trade as what? A sell. You wouldn't have taken this as a buy. You wouldn't have expected a buy on this trade. But if you know what divergence is, you would have waited for what? A buy. You would have known that, hey, I'm going to buy this market what? Very soon, because very soon the price should do what? Come back and close above this level. And after that closure, you now take your trade as what? A buy. So guys, you also did what? You won this trade as it was going back. You won this trade also as it was what? Going back. You won this trade as it was going back. Now it did not just stop there. It went up and broke this previous level. It broke previous level, giving us what? Higher highs. But what happened on the oscillator? Oscillator was recording something else by giving us what? Lower what? Highs. So that was another divergence, guys. That again was what? Another divergence. Now it doesn't mean you should just sell the market. Where was our selling? Where was our selling period? Where was our selling period, guys? At this level. That was the point we sold this market. But if you're very skilled enough while trading channels, you would have taken this as an early entry. You would have risked your money. But guys, this was the main place you sold your market, following this divergence strategy. So if you were experienced enough in this trade, in trading channel, you would have taken this trade what? As a sell all the way up here. But the bottom line is that what? We won this particular what? Trade. We won it. So we also got that one right as price was traveling down to the what? The support level. We also got it what? Right. Now price also did what? Went back up. Price went back up. First stopping here and did what? Went down. Starting to go down, but did what? Come back up. Did what? Went back up, guys. It went back up. But was it the same thing on the oscillator? Oscillator was falling while that price was rising. See what oscillator was doing? Falling. While price was doing what? Rising. So at that point, we waited for what? This price to do what? Come down and break and close below this level. Now they are breaking below this level with this kind of candle. If you're comfortable enough to take that trade at that edge, you would have taken it. But if you were not comfortable enough, you would have waited for what? A retest. And after this retest, see what you did. You took this trade as what? A sell. So irrespective of where you took it, either from here or from here, the bottom line is that what? You won that trade as it was traveling down to the where? To the support level. So you got this one also right. Now price going back up, was there any other divergence? the price going back up, was there any other divergence, guys? Comparing what is happening here and what is happening here, there's no divergence, because what the price was doing was the same thing. Price was doing the same thing, so there was no divergence. So it went out on that trade. It went out in that trade, guys. But approaching this level, what happened? The market also established what? Differences. The market also did what? Gave us what? Higher highs. And what? Oscillator was giving us what? Lower highs. Are you seeing that? So at that point, what should we do? The same scenario. Wait for the perfect what? Entry time. To also take this trade as what? A sell. So have you seen that you are not just trading this as what? Normal way every other person trade. You were also putting more confirmations to it. So all the times we were in the market in this channel, right from when the channel started and when the channel did what? Ended, we won all the trade. All the trade we took inside that channel was all what? Winning trade. Okay, they were all what? Winning trade. In the first channel, out of 5 trade, we won 4 and lost 1. This second channel, we are winning all. So have you seen what divergence can do for you guys? If you didn't trade with divergence now, you would have lost from here, you would have lost 1, you would have lost another 1. Okay, you would have lost another 1 here, and probably lost another 1 here, because price went all the way up. Price stopped here, it went down, still went back up. So you probably had lost this particular trade, depending on where your stop loss would have been. So you would have lost 1, 2, and 3. For following divergence, going for more confirmation using the divergence, you did not lose what? Any trade. So what to do to escape this thing is what? Once the price breaks a particular level, do what? Go to the oscillator and do what? Wait and compare it. Is it doing the same thing? So if it's doing the same thing, don't take. But if you're doing something differently, you wait and take what I've said and wait for the perfect time to enter your trade as a buy or sell. Okay guys, so this is where I will stop for today, and I hope I was able to teach you guys or relate to you guys something meaningful from the market. Okay, do well to backtest before considering this strategy, and after which you should use it. Alright, I'll see you on my next video, but do well to subscribe to my channel so that the next time I release another video, you'll be the first to get it.